Now, new vehicle sales gained 9.4% year-on-year in August. That's to 56,253 units, with rental companies leading demand. Once again, we caught up with Nico Vermeulen from NAAMSA to unpack the numbers.
Well, I think the recent industry sales performance has been encouraging. We've been seeing steady growth, certainly for the first 8 months of this year. And yes, on the car side, the market was up over 11%. Light commercials about 5.8%, medium commercials up 11.8%. So an impressive, encouraging performance all round. On a year-to-date basis, similarly, we're seeing reasonable growth, double-digit, and that comes on top of improvement in calendar 2010 year-on-year of over 25%, and 2011 16%. So there definitely is momentum. And I think most commentators are adopting a reasonably optimistic position for the balance of the year, although we do envisage some headwinds come 2013.
A lot of the support in the meanwhile still coming from the rental companies. How sustainable is that?
Well, the car market definitely has outperformed the other segments over the last 2 months. Seasonally, as you know, the car rental industry tends to refleet during the months of July, August, September, October. And certainly that was a positive contribution. 1 in 6 vehicles, new cars sold, can be attributed to demand and purchases by the car rental companies.
Nico, so far in real terms, also sticking with passenger vehicles, the price increases have been negative in real terms. With the rand weakening, do you think this is a lasting trend?
Well, I think a major contributor to the strength in demand for new cars has been improved vehicle affordability in real terms. I mean, average vehicle prices, according to the statistics that we monitor, in 2010 rose by about 4.7% for the year. That was down to about 3.6% in 2011. Year to date, it's well below 3%. But the rand weakness that we've now noticed once again, certainly in the last month, on the back of the unfortunate events at Lonmin, definitely we believe will put upward pressure on new vehicle prices, particularly when it comes to fully built up imports.
Meanwhile, dealers are also offering various incentives and attractive financing packages, so really pulling out all the stops to get the volume going.
Well, South African consumers have virtually unlimited choice when it comes to new cars that they can purchase. Over 60 different brands, over 2,000 derivatives. It really is a buyer's market out there. And then, yes, that is being supplemented by very attractive incentives and special deals, and also extended maintenance plans. I mean, 3 to 5 years has now become the norm in the industry. So it's a good time for consumers to consider purchasing a motor vehicle.
Nico, on the export side, the number looks pretty dismal on a year-on-year basis, up a mere 0.8% in August. But you spoke to me before we chatted here and showed me how volatile these numbers really are on a monthly basis. So are you worried about the exports?
Well, on a year-to-date basis, we're running very close to the figures achieved last year. And of course, it was only during the course of the first and second quarter that the contribution from the BMW 3 Series export program and the Ford Ranger light commercial vehicle export program started to make a contribution. So the momentum is picking up somewhat. And we do hope that for calendar 2012 will be equal to or slightly above last year's total export figure of, I think it was 272,000. Hopefully this year will be about 280,000. But then for next year, the industry is anticipating well over 300,000. Particularly as exports of light commercial vehicles start to gain critical mass and some new markets are being supplied, such as Australia and even China, in the case of BMW.
Nico, coming back to the local domestic sales, NAAMSA seems to be expecting growth for the full year of around 10%, but you are warning that next year will be tougher.
Yes. Well, even the 10% improvement, given the fact that year to date we're running about 12.5% ahead of the same 8 months last year, does factor in some more subdued growth momentum, some lower growth momentum for the balance, which is 4 months of this year. But then, as we know, there are inflationary pressures developing in terms of food prices, fuel prices, electricity costs, and then over and above that, the rand weakness. And to the extent that that does translate into higher new vehicle prices in months to come, that could serve as a dampener on the sort of momentum that we've been seeing year to date. And on top of that, of course, there's a very close correlation between the performance of the new vehicle sales and the domestic economy. So to the extent that we envisage slower economic growth in time to come, that would definitely also then impact on demand for and sales of new motor vehicles in South Africa.